Guys, if you understand what I want to share on this video, trust me, you're going to be making a hell ton of money and you're going to be better than at least 40% of traders. You need to know what is the first thing you need to do when you get on the market. Now, the first thing you want to do is to go on your higher time frame and look for what is considered a key level. Now, these key levels will be your supply and your demand levels. Now, why are these levels key? Because supply and demand levels are key levels where big traders place their orders, either a buy or a sell. I'm going to tell you guys why some demand levels would not hold, meaning whether in some cases people place their orders on demand level and then they still hit their stop loss. I'm going to explain that. So make sure that you pay close attention. I also recommend you get a note so that you can take notes. So I've marked out this supply level. Why am I marking out this supply level? Why am I marking out this point as my supply level? Look at this, right? Look at this. Now, if you see this, you see that this is the last bullish candle before a push to the downside. Now, there's a huge chance that when price comes to that level, it's going to reverse. That's the essence of a supply level, right? Sellers are going to take back control of the market and push the market to the downside. Now, on these particular levels, what can you consider as a a strong demand level? It will be this level for me. There are other major demand levels, right? But we are going to use one that is at least not too far from the supply level, right? Now we have a demand level over here, which I'll mark it out. Why? Because you can see that this last bearish candle, after this last bearish candle, we have what? A push to the upside, right? Now, I'll show you guys something. Please pay very close attention, right? So first and foremost, we're going to mark out that level. Now, we are marking out this level. Please listen. We are marking out this level, assuming we are not seeing this. From here, we are not seeing any of this. We're not seeing all of this, right? Just assume you are not seeing this place that is marked out, right? All you are seeing when you came on the chart, all you saw when you came on the chart was that, let this mark out, no? So all you saw when you came on the chart was that price gave us this down move, gave us this up move, gave this point as the highest point. This is the swing high, swing low, break of structure, and then you don't see this, right? So what are you doing? You're marking out this level as your what? Demand level. Let me write it out. Now, for SMC traders, what happens, right? So your expectations is that when price comes to this demand level, right? Once price comes to this demand level, buyers will take back control and then they'll push the market to the upside, right? Now, what happened? Price stopped out, meaning price went to the downside. Now, as long as this is one of the vital points I want you guys to understand, right? As long as this demand level is valid, it is a strong zone that will still be respected. But look at this definition again. Pay close attention. It is a key level where buyers are placing their orders for either a buy or a sell. So when price take a decision at this key level, which is a demand or supply level, they move, they push from these levels are always massive. So what do? You mark out this level, right? Mark it out. Just mark it out as long. Now, what happened? What can you see here? What can you see? What can you see here? Now, after price hits your stop loss, let's assume you place your trade here, right? Just stay with me, guys. Let's assume you place your trade here. Now, you guys should obviously know that there are additional confluences, so you can go on your like lower time frame, like the 1 hour time frame, to get a better entry, okay, and a better place to put your stop loss, right? Now, price hits your stop loss. This was your target, right? Price hits your stop loss. You don't even need to panic. You don't even need to panic at all. What you need to do from this particular level is that you are going to wait. Since this level is strong, let's say you miss this entry, right? So price push to the downside, you miss this entry. Remember, this demand level is still valid, right? Now, what will you do? You mark out another internal demand level, which is this particular level right here. Mark it out, okay? Now, as you can see, once price came to this internal demand level, which is our previous huge demand level, right? What did price do? Price tapped in there and then shot this downside. So this your internal demand level would now start serving as an internal supply level, Please understand. But this level is key. The same as this particular level right here, it is also key. It is also key. And also, I'm seeing another level over here. Look at this. Look at this. You guys need to mark out these key levels. They are very, very important levels. Now, when you see a level like this, where price got there, gave like a bearish indication, right? Gave us like a bearish move and then push. You saw a good push to the upside. That is another key level you must mark out, which serves as either your supply or your demand level. Now, there are some traders that will actually use this, okay, as a point to push the market to the upside. Now, as you can see here, price came to this level, right? Started giving us rejections to the upside and still swept to the downside, but that is still a key level. So what will you do? You go down to your lower time frame, like your 30 minutes time frame or your 15 minutes time frame or your 1 hour time frame, and you place a short around this level because this is a key level. Now, let's say you miss this entry, you don't enter this trade anymore, right? You forgot to take a short position, right? After seeing these bearish moves, forgot to mark out and take a short position, right? You leave it, just leave it, come back. Now, as you can see here, if you look very closely at this level, right? If you look very closely at this level, you'll see that price still came back to tap on that level, on this level, on this last bearish candle. Let me mark it out well so you guys see it. Price came back to tap. See, look at that tap. You see it? Tap there. Let me zoom it in. Price came back to tap on that level and still sold to the downside, back to this other demand level. Are you guys seeing this? Are you guys seeing what I'm seeing? And look, after tapping to that demand level, it still started pushing to the upside. Why are you not making money? Why are you not making money? If you understand this concept, what you need to just do is to add your additional confluences. What are your additional confluences? You can look for a good point of interest. You can look for maybe your reversal pattern, right? Maybe your inverted head and shoulder, or your double top or your double bottom, and all of those other additional confluences to make this position valid. And you place your trade and you make money. Now, for those of you who are looking to, learn more about this or get like a free mentorship, you can send me a DM. Now, if you have any questions, please let me know your questions in the comment, because I want to make sure you guys fully understand this and you're using to make money. Okay, so let me know all your questions in the comment. Like this video, share this video with one of your friends who are traders so that they can also gain knowledge. Okay, and just leave a like, leave a comment, and let's just make money, because that's the essence of being a trader. But I hope this add value to your life, and I hope that through this you will become a better trader. Don't forget to pray. If you haven't given your life to Christ, do all to give your life to Christ. He will also help you, give you knowledge and bless your going as a trader. Okay, well, God bless you for joining. Peace out.